Hi, this is Aptamer with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 7th of November. Starting off with the FTSE 100, where we've got a falling 50-day line where the market's failed twice in the recent past. You can see the brief spikes through that blue line there and then back down. We've got the risk of a test of the floor of the rising trend channel from last November, 81.25, or the 200-day line, 80.95. So the market with the RSI below neutral 50 at 43, looking slightly weakened in the wake of the US election result, which is perhaps at odds with the other major markets. Looking at the DAX, you can see that we had that push through 19,500, fill the gap down that we had at the end of last month, and still, at least with this market, we're above the rising 50-day line, 19,050. We have the risk of a test of the floor of the rising trend channel, 18,900, but at the moment, this market with the RSI at 50, just about keeping its head above the water and giving the scope there for a move up to the top of the channel. Obviously, the political situation in Germany, even worse than what we have here at the moment. Resistance line there around 19,500, so maybe for momentum traders, end of day close above that, which we failed at many times, would then bring the possibility of 20,500 by the end of this month. Moving on to the Dow, which has obviously celebrated the election results. Here we've actually temporarily hit the top of that channel there, actually right on the nose, which is not a surprise, given that that's where we wanted it to go. But 43,700, the top of the channel there, and basically looking for a fresh leg to the upside if we can get an end-of-day close through that line. The initial target there, if we can get through that line, would be the line I'm drawing at the moment, up towards 45,000, maybe by the end of this month. But amazing movement there for the Dow, and obviously an interesting result politically as well. On the downside, hoping that we won't see anything lower than the floor of the gap there, 42,200, or maybe at a stretch back down to the 50-day line at 42,000. But nice bear trap rebound from below the 50-day moving average, which is still rising there. Moving on to Bitcoin, where we also hit what we were looking for right on the nose. In fact, we're right there now. That June resistance line there at 75,000 is what we were looking for. And we bounced basically off the uptrend line there from September. Next level up actually is the upper parallel of that June resistance line, which is a March resistance line projection, heading for 87,500, which I suppose would be a decent end-of-year target for this market, especially while we remain on the right side of 70,000, which is basically that September line. If we're really lucky, we'd hold above the old October resistance at 74,000. So that would be the ideal scenario, that we don't even have to trade lower than the previous record highs. Moving along to gold, and here the situation is that the rug has been well and truly pulled from this market, but there was the chance, and we already mentioned that yesterday, that we'd hit the 50-day line there, and that's almost exactly what we did. 26.50 was basically the area of the 50-day line. So while we're above that, we've got a chance of recovery, and one could also say that we can widen that channel there from back in June and say that the floor of the channel there is at the 50-day line, but really be rather awkward if we went back below that 50-day moving average. RSI at 43, first time it's been below neutral 50 since the beginning of July, so a bit of a sea change on that. Obviously there is support below 26.50 at 26.25, last month's lows. Moving on to the pound dollar, which I haven't looked at for a day or two, and here you can see that we've fallen out of the rising trend channel that we had there from back in March, April, but we've bounced above the 200-day moving average at 128.10. Ideally, any dips now towards what the 200-day line are buy opportunities up to the top of the range at 130.50, but only back above that, which has been stubborn resistance, would really get the pound out of what is potentially a negative setup with that rather extended right-hand shoulder there, and the risk of moving further down towards August support there at 126.70. Clearly, with the interest rate outlook and the possibility of a cut today, the pound is slightly weakened, although we have to see how much that's already been factored in. Moving on to the stocks, and starting off with Aptamer, where we have perhaps an outlier type of setup here, rising trend channel base. We've had two unfilled gaps to the upside off the lows, so that looks like a decent signal. We've also got the RSI back above neutral 50 for the first time since basically the beginning of June, which is quite a change. And so on that basis, looking for the shares to head up to 0.35, perhaps as soon as the end of this month, given the latest news for the company. Obviously, we want to see the shares stay on the right side of 0.2 pence recent support. Move on to Avacta, which continues to mesmerize and puzzle in the same sort of way. At the same time, rather, here we've got an uptrend line there from June. The uptrend line basically lying at 48 pence. So if you're an Avacta fan, you'd be hoping that we hold 48 and then head up towards the 200-day moving average for the fourth or fifth time in the recent past, up there at 60 pence by the end of next month. Below 48 risks the dreaded retest of the 40 pence area, which we've had basically since the beginning of the summer. Arcontech is next, and here we've got a rising trend channel, and the view is that hopefully, it's quite a wide one actually, but the view is that we'll stay above the 200-day moving average at 103 pence, ideally above recent support at 108, and head up to retest the September resistance near £1.35 by the end of this month. The reason for the excitement here is the unfilled gap to the upside by two of them, bear trap gap reversal, and then the gap higher at the end of August, as well as a sharply rising 50-day line and end-of-day close above that, 115, and hopefully we can head up to 135 relatively quickly. Moving on to a stock which I think I looked at yesterday, Bigblu, and it continues to be blue in terms of the candles, looking for 50 pence by the end of this month, while we remain above recent support around 37 pence, and obviously now we've got the 50 and 200-day lines both rising, which suggests that we're going into a golden cross later this month, and that tends to be the strongest part of the cycle. Moving on to CleanTech Lithium, where shares are bouncing without any significant news. Maybe the market's feeling that we're going to get news on the ASX listing, the long-awaited ASX listing. Here we've broken a line of resistance from September around 9.9 pence. Above that, looking for the shares to fill the gap up to 14 pence, hopefully by the end of this month. Ideally, we stay above that September line. Moving along to EnergyPathways, where it's becoming interesting in terms of the battle between the bulls and the bears. We came back after hitting that line, my last line there at 12 pence. We're looking potentially 13 pence by the end of this month, but we hit the line early at just around the 12 pence level. Back now to the third target that we had there, or towards that, 6.5 pence. Need to stay above 6.5 pence to give us a chance to head back through 10 pence by the end of this month. The initial trigger here would be an end-of-day close back above 8 pence, which has been 2-day resistance and was support on the way up. On to Firering, which apparently is getting closer and closer to production. Looks as though we're in a mid-move consolidation here. The minimum target here now looks to be 5.7 pence. And if you look at the 50 and 200-day lines, you could argue that we've had a cross between them, but it's very close to being a golden cross as well. But at least while we're above 4.3 pence, looking for 5.5 pence plus as a minimum, given the potential mid-move consolidation that we're seeing at the moment. Would have expected crypto-related stocks to soar in the wake of the Trump victory and the rise in Bitcoin, but only really KONE has stepped up to the plate. We had an unfilled gap to the upside yesterday off a rising 50-day line, so it's a pretty good signal. It's also a bear trap island reversal, one of our favorite and one of our most effective signals, so gapping down in August and gapping up now. That suggests that we should be able to get up to that June resistance line projection at 75 pence, let's call it, by the end of this month or even sooner. It'd be really interesting if we don't get up there. Ideally, we stay on the right side of 55 pence, the top of that gap and recent resistance on an end-of-day close basis, only back below that 50-day line at 50 pence, really delaying the upside scenario. Interesting position at MicroSalt, which is certainly a moving situation, which is a welcome thing at the moment. We've got a rising 200-day line. We've had a bear trap rebound from below that. Also got a rising 50-day moving average. So this stock actually going into a golden cross, hopefully later this month. That means that while we're above the latest support area at 72 pence, we're still looking for £1.20 as a best case scenario target as soon as the end of this month. So let's see if MicroSalt can step up to the plate. Another stock which is slowly recovering after rather a miserable run in the recent past is Phoenix Copper. Perhaps there's funding news awaiting in the wings. We've got a line of resistance there at 9.3 pence. Above that, looking for the shares to at least get back up to 12 pence by the end of this month. And you can see yesterday's very strong hammer candle and today's price action with the open at the low and the closing so far at the high, or currently at the high of the day, gives this chart a rather better look than it's had for a long time. And therefore the 50-day line, or the line that I'm just drawing there at the moment, top of that triangle from the end of September, looks as though we should be on course for that, especially while we're above today's support at 7 3/4. Moving on to the last two. First one is YouGov, where I like this little bounce off the 50-day line. That's at around £4.40, and above that, looking for the shares to head up to £6.20 maybe by the end of the year, on the basis that this is a mid-move consolidation after the bear trap rebound that we had from below the June support there at £4.05. But the key here is staying above that 50-day line. RSI bounce at the neutral 50 level as well, so that's another leading indicator on a move to the upside. Finishing off with Zoo Digital, and here we've been through the 50-day line there at 38 pence, conquered now the 200-day moving average at 45 pence, and above that, looking for the top of that rising trend channel from May, as high as 80 pence, maybe by the end of the year. Obviously, it's a punchy call, but the shares have behaved in a relatively punchy way. That's it from me today. More updates tomorrow.